And in this week on Fed Watch, so you're budgeting for rent and groceries, but prices keep going up. That's kind of what's happening in the US economy right now. Inflation is high. The Federal Reserve may raise interest rates because of recent signs of unexpected strength in the US economy. If inflation persists, the Fed could raise to 6.5% by next year, likely causing a decline in stock and bond prices. Imagine the feds are like the parents who control the credit card, and they might have to raise interest rates like the amount you pay to borrow money to slow things down. This could mean tightening our belts for a bit with a possible stock market dip and less money flowing around. But hey, at least prices will stop going crazy. Interest rates going up, like I said a moment ago, impacts everyone, whether you like to believe it or not, impacts everyone directly and indirectly. Also, as it pertains to the housing sector, when interest rates are this high and the cost to borrow to build new builds, new construction goes up, right now to build for developers, the cost of money is around 9-10%. That's expensive. Someone has to pay for it. So it goes down to the end buyer, to the consumer, the renter or the buyer. So when money is that expensive, developers stop developing affordable housing, which is desperately needed in our country, and it creates a problem down the future. Imagine this. We got 2 million new people that moved into our country through immigration, right? New immigrants, 2 million that we know of. Developers slowed down on developing this year, last year, and this year because of the cost of money. In 3 years, 5 years, we have a demand for housing. We already, depending on who you talk to, we already had a shortage of 3.5 to 4 million units short for housing. Now you add an additional 2 million people to our economy, to our country. These people need housing. Developers stop developing. Guys like me stop borrowing money and creating new housing and creating new affordable housing. What happens? We put more stress in the future and a higher demand for housing in the future, which in the future means what? Prices will continue to go up. So if you think rents are high today, you think houses are high today, wait 5 years. Wait till you see what happens in 5 years or 7 years.